What's up, everybody? Welcome to Bullish Rippers. This is Evan, better known as Stock Market News on Twitter. Every Monday at 9:20 a.m. Eastern and Friday at 4 p.m., myself and my co-host, Wolf_Financial, also known as Gav, put on these spaces to help you guys get ready for the week ahead in the market and then get caught up on the week just past. Our goal is to educate, inform, and hopefully entertain you guys a little bit. We really appreciate you tuning in, and I hope you enjoy.
But Neo came out and has about 10.5 thousand sold in December. LI Auto came out and said they had about 14,000 EVs sold in December, and about 90,000 total from 2021. Let's keep it moving. Now I am looking at a lot of headlines for this week. For some reason, this weekend came through Tesla. So Tesla is up about 8% this morning. Uber sent an email to drivers letting them know that they'll soon be able to rent a Tesla from Hertz to drive for Uber. This was part of that deal from a couple months ago where Hertz bought a bunch of the Ubers and then they went around like a back end and are going to license them through Uber. So Hertz is now a middleman in that aspect, but it's really interesting. Shifting over to the earnings for this week, it is a very, very light week of earnings. The banks and everything like that, I believe, are in 2 weeks. So that will be the start of the next cycle of earnings season. This week, we have Bed Bath & Beyond, which kind of became a meme stock name around this time last year. Constellation Brands, and I believe Walgreens is on there as well. But, overall, a very light week of earnings. The biggest story from over the weekend was definitely Tesla announcing their Q4 delivery numbers. They delivered a total of 308,000 cars. The mix was about 11,750 Model S's and X's and 296,000 Model 3s and Model Ys. Step back. I think that really tells you the direction that EVs and where sales and everything is going. That, the S and the X's, obviously they're their higher margin, more expensive cars, but the bulk of the sales for Tesla are the Model 3s and the Model Ys. So, definitely very interesting to see. In total, that brought their 2021 total deliveries up to 936,000. That was up 87% year over year. I did post a chart kind of going through how many sales they had each year. Last year, it was right around 500,000. Year before that, it was 367,000. Oop, my dog is barking in the background. I apologize. But yeah, so there was pretty big growth there. But as we know, there was a lot of recalls this year. There's a lot of other stuff going around. Not everything's perfect. There's definitely growing pains. But, when you're able to get a company to grow by 87% when they're around this area and in the deliveries, that is definitely very, very impressive. Right now, their annual run rate, so this was if they did the Q4 numbers, basically times 4 is really what this is around 1.23 million vehicles. So even if they had just kept it up now, what they had in Q4 for all of 2022, they would be right around a 30% growth rate for the year. And as we know, they have 2 more factories that should be coming online in the year. So this could definitely be a second consecutive year in a row of some pickup there. But we'll see if it's as good as the last one. Yeah. So another interesting stat from this one, they actually delivered more cars in Q4 2021, which just passed, than they did in all of 2018. So you can kind of see the pickup in deliveries there. Continuing it, moving. Like I said, that was definitely the biggest story. There were some stories from outside of the stock market world with Antonio Brown leaving the NFL yesterday mid-game. But I thought the craziest thing about that story was, if you look back to his Twitter about 5 days ago, he put out a tweet for a shitcoin and he was pumping it. And so maybe he kind of knew what was coming and he knew he had to start collecting the bag from somewhere else. But if anyone wants to know, this guy is out here repping Santa Floki, whatever that is. So yeah, do with that what you will. Keeping it moving. Adam Aaron, CEO of AMC, put out 2 tweets this morning, kind of talking about his plans for 2022. And, one thing I do have to say about Adam Aaron and AMC in general, like, you can respect them, you can hate the company, you can think whatever, but Adam Aaron is playing into it and really trying to get his stock price up and doing whatever they can. So I guess about tweeting with it. Gav, I do got a couple more stories, not too many, but I'm seeing markets open right now if you want to take it over for a minute if you're seeing anything there.
Yeah, market's open. I'm going to go to Richard first. I'm watching right now. I'm inside AMD 144 calls I bought from last week. I'm thinking I might sell here at the open. Richard, what are you looking at the open? And then I'll come back and run through some names.
Sure. So, yeah, first of all, thanks again for having me on. Always a pleasure. Um, I'm watching mostly the semi names, NVIDIA, data storage, MU. Obviously, I'm watching Tesla, but I'm not trying to be too anxious with this gap up here, especially on Tesla. Um, I think just the risk reward's a little bit tough, especially just buying right at the open. I think a lot of people are probably pretty anxious to just get some buys in the new year, but really you want to be patient and stock those entries and try to find those low risk spots. So I'm really focused on NVIDIA. I think that's my number one idea today. Really close to the 50-day moving average. Nice decline on really low volume the past 4 days. Back towards the 50-day, 21 EMA and 10 EMA all kind of stacked together. So I'm watching that through 300 as well as yesterday's high. But other than that, I'm trying to be pretty patient here because, like I said, with a gap up, you should never feel kind of pressure to make a purchase. Um, Honestly, that usually turns it around and it'll pull back in and give you a better spot intraday. And basically, if you just push it too much, you might get just an easy stop out or give up too much. Um, so I'm getting some alerts going off actually on NVIDIA. So yeah, like I said, don't feel pressured to buy gap ups because usually they'll turn around, fill that gap, and set up an intraday setup. So just be aware of that. Other names I'm watching, WIRE, which is forming out the right side of a base um, after a really nice uptrend. And also I'm watching GFS, which is an IPO within that semi space, which is pushing up today. And looks like it's trying to continue up the right-hand side. We did pull back from 67.47 late last week, but it's definitely a recent IPO I've really got my eye on up the right-hand side of the space. Looks pretty promising and is also pretty liquid, which I found really helps with these recent IPOs.
Very nice. I just booked out of AMD for better, for worse. It's still seeming to be surging pretty nicely. I took those 144s on Friday, and obviously they're already in the money. Now at 147. My rule for this year, if I see like 30% profit, I'm taking that shit. I am not letting these trades go down. And I don't know, with stop losses, there's definitely benefits, losses. You end up sometimes leaving some on the table when it comes down and gets stopped. So for anybody that's with me, if you're in a trade and it's running, at least take some profit. I happen to only have like a contract left on that one. So I just went ahead and grabbed that. It was up like 2.2%. It's up like 2.5% now. But yeah, a lot of these semis are running and they could run throughout the morning. I'm looking real quick on black box stocks and a couple of others, just looking at the flow. So of course Tesla got alerted right off the bat. There's size coming in as of 45 seconds into the open. So you'll just be able to see if you're looking at call flow right now. Tesla already has $35 million of premium that have come in. Basically every single minute right now, people are sweeping in. I just see like $3.6 million swept in at 8:33, but it looks like there was money already coming in the first minute. I'm gonna guess in the probably tens of millions. Yeah, looks like big money came in right off the bat. I don't see anything else yet that I'm alerted for. It looks like Pear has a lot of activity, so that's PEAR, but I recommend staying away from it. We've already seen this one pump and dump beforehand. Stock Talk Weekly has talked about it. They're halted right now, up 28% on Pear. The other one that's on my screen is JWEL, Jewel. That's just something that is on the scanner. That's or Jow Global. Looks like they're coming back into the green. I don't know a ton about this one. They're just having a wild, really month and 3 months. I'll have to look more at that JWEL. Besides that, just bringing it back to the overall watch list, pretty strong start. Obviously helped by that AMD call for me, which is now I'm still have shares. They're up 2.8%, so they're still doing pretty nicely. They're coming up to 148. Those were weeklies also, so with theta and everything, when I see profit, especially on a weekly, I'm just going to get out. PLTR, bit of a strong start, 1.48. GNI watching. Okay, so the big boys. So Tesla's still holding up 8.5%. If you're looking at Tesla on the session chart right now, you are going to see it is trying to basically come through right above its 50-day moving average, trying to hold the 50-day, which has been pretty powerful for Tesla. And it surged back through it last time that it held the 50-day. In addition to that, you have Apple up almost 1%, 0.84. I'm going to assume it's probably the second leader. Yeah, second leader when you're looking at call flow. So a lot of big money's coming in on Apple. Not surprised at all. People, especially anybody that took gains on it, is probably getting back in now for this year, now that their wash sales are over. SE is just holding positive. Etsy holding a little bit. Square up 1%. Would love to see Square get back to the 170 range. And that's kind of like my initial look, just of things going on. Twitter's down. I hope everybody bought their Twitter puts. Just so maybe I shouldn't say that. But you know, when space is giving you enough troubles, you get to that point. Okay. With that being said, let's keep a little rotation going here. We're going to go through some analyzing. Small crypto pullback also. I do think. Oh no, it didn't. Okay, Ethereum and Bitcoin still up nicely. So just a lot of volatility within Stock City. Okay, Matt, you've been probably up trading for a few hours already. What's on your radar as we're now in the open?
Happy New Year, everybody, and good morning, Gav. Well, this is the beginning of the year, and Nvidia, that was my big play from last week. That's front and center, and it is screaming out the door. The Nasdaq ran up 70 points just immediately after launch. One of the things I always do at the beginning of the year after we have the end of the year selling is that people are cautious to see. You know, someone said a second ago, stalk your trades. I think is a great way to put it, because the first minute of the market being open, we had this humongous gap up in futures, which first of all was very unusual. But I guess when you think about how much end of the year pressure we had right at the end of the day, that was just kind of a recovery from that last dip at the last part of 2021. So now people are looking to make sure that the market isn't going to sell off. And if it doesn't, they're going to all rush to jump back in. I mean, I think this is the strong week. We're going to start off strong. We're going to finish strong and keep going strong. I don't think that today might be the day where we start off strong and keep pushing the highs. The signals I'm getting are pretty bullish across the board for pretty much all things. So big tech, that was kind of the most beat up sector at the end of last year. So we're going to be watching some of the bigger names there. Apple right now pushing past 180. Apple have got like a 184 price target on that. Microsoft testing, it's basically testing yesterday's range as well. Those are two of my breakout stocks, I think, that are going to be the ones that'll signal where we go, I think, in big tech going into the new year. And if we get a carry there, then the market's going to push. So I think that being cautious right out the door is kind of what I'm doing. I'm making no entries right now. I'm going to let this guy settle out. But if the S&P and Nasdaq don't follow into lower lows by today or tomorrow, I think that's all the confirmation the market needs to continue this rally forward. So give people some confidence and scare them all back into the trade. I shared something in the last space last week that we've been monitoring, that the asset managers from July of 21 all the way to the end of the year, on a net selling spree, not accumulating at least S&P and Nasdaq futures. They've been selling, but the market's been going up due to shorts covering. So now that everybody's gotten out of their trades, it's almost like a fresh market and people are sitting on cash in an inflationary environment. To me, if market isn't selling off and you have cash that's dealing with inflation, the best place to do is put it somewhere. So we're probably going to see a massive influx in asset manager buying for at least, the start of the year. And I think that's going to pick up as soon as this year this week or maybe next. So I'm very bullish right out the door for sure, but cautious today.
Awesome stuff, Matt. Thank you. And with that, we'll send it back over to Richard if you have any thoughts on your game plan for today and this week as we kick off the new year here.
Sure. So I did actually go ahead and buy some NVIDIA through yesterday's high. Actually got filled on a buy stop at 335 cents, I believe. It's acting well. Added a little bit as well through 303. And I'll just kind of sit and see how that closes. Definitely want to see a strong closing range close up here. But I like the overall setup. The development of the space, I think, is good. One drawback is on the weekly chart. We do see some distribution a few weeks ago, but we'll have to see how it turns out. But I think the semi space is definitely one you should have your eye on. I think Matt's watching as well, which is always good to see. Tesla looks like it pulled back a little bit and then had a nice strong push over on a 5-minute chart. And we'll have to see whether that opening range break on that 5-minute follows through. But you definitely want to be managing risk here because we do have not all gaps get filled. And actually, if they don't get filled, it's a huge sign of strength. So I'd love to see a super strong push here, and looks like it's strong so far today, which is good to see and good overall for the growth space, I think.
Interesting there with NVIDIA. I'm getting multiple pings on NVIDIA right now. A lot of money coming in right now on the 310s, it looks like, is where you're getting bullish repetitive action on the 310s on NVIDIA. So Apple and NVIDIA are the two that I've basically been alerted on so far. Apple, a lot of money coming in. I have no problem if somebody wants to, take a gander on Apple here. I think it could see a strong week. It's broken through 180 again, which has kind of been, or perhaps that's an all-time high. It could set a new all-time high today, I'm pretty sure. And obviously, beginning of the year setting an all-time high, I think is definitely a bullish sign here. Tesla almost up 10% now, held the daily, let's see, on the 30-minute, pretty good too. Yeah, I mean, I'm not touching Tesla except for common shares right now. But okay, let's bring it around. So, Evan, I am starting to get kicked. I've been kind of up and down a couple times now, so you may have to lead in. Going to lean on you to throw some stocks along with Joey. I'll be giving you guys some lists. Once Danny's in here too, we'll get him up here, kind of go into some trading. But we can kind of walk through this. So first off, Evan, is there anything specific that you are interested in? I can also throw out plenty of names or drop them to Joey.
I mean, there's a couple names there. I think why not, while we have you, you spit out the ones you have, and then I'll come in with someone later.
Okay, all right. So let's go two to Richard, and then I'll throw over two to you, Matt. Just because I know you have to pull the ones that I'm looking at, Matt. So I would like to pull for AFRM as well as Upstart, if you want to pull for those. And then Richard, while Matt's grabbing those, would like to take a look at HUT, which has been pretty beaten down, as well as Coin.
AFRM is right on what we kind of like our setup. You're on the bear side of the market. Anything below 100 in AFM is certainly bearish. But there's a 95 support. Some large call positions are showing up there, and of course, all the net gamma is negative below 100. So you have 195, a very wide range, but no bull activity. Yet I would say, unless we get a break of 100 on AFRM, I think that's pretty much doomed to stay in this range. So 100 is the breakout level on that guy. And as far as upside target, I don't have one on that. So this one's still kind of on the bear side for me. So, and for as far as Upstart goes, let me take a quick look at that one. Upstart is maybe starting off at about 155. Upstart is all bearish signals right out the door. No supports on 145. 160 is huge resistance. Gamma is negative. Sell programs are active. So Upstart is probably got a nasty dive to start this week out. So all signals are down on that guy as well. Let's see. Any more tickers you have, Gav? I can run them really quick.
Yeah, I threw two over to Richard also, and then I'll come back over.
Okay.
But yeah, so Richard, do you have the two I threw to you?
Yep, HUT and Coin. So first take a look at HUT. This is a pretty volatile crypto-related name. It's made a super powerful move over the past year or so and was progressing well out of a base into August, into November. Then we kind of switched from an uptrend up the right-hand side to a failed breakout, and then it undercut the 21 EMA and then lost the 50 SMA, and that was on 12-1, 12-2. So my current view is it's just kind of in a downtrend here. We are trying to find support near the 200-day moving average in 7.5, but this could go sideways for weeks, months, and even progress further to the downside. So really, from my eye, I would wait until the bulls really take control once again, and we get back above those moving averages, and those moving averages start acting as support and also curl upwards. One other thing to note is if you put an anchored VWAP at the recent high, and that was at 11.9, that's all the way up at 11.07. So this is going to need a lot to kind of turn things around is kind of my overall view on this. Taking a look at Coin, this is kind of in a similar spot, which makes sense because they're going to be a little bit correlated. This is definitely one I have my eye on just because of the really strong numbers and kind of the potential kind of end factor in CAN Slim with Coin. And this is really tight the last few days. but still it's below a declining 21 EMA. The 50 SMA is curling down as well. So this is just kind of basing and could take a few more weeks to really develop before I would be comfortable trading this. And right now, I think there's some better options. The semi names are right near all-time highs, trending nicely above their key moving averages. So this group, the crypto group, which was a leader, has kind of switched out to be a laggard for the time being. That doesn't mean that can't switch up later in the year. But as of this point, the semi space is more of my focus just because that's what's kind of getting the money inflow at this moment. And also kind of the data storage group. EVs now are kind of shifting to be a leadership group as well. And I think the cryptos just need a little bit more time to develop everything, develop their charts, and see if that money comes back in and starts new uptrends.
Great stuff, Richard. Thank you. And with that, we'll send it back over to Matt for two more names. We have Airbnb and Fubo.
All right, give me 1 second, guys. Yeah, it's usually really hectic in the morning. So like I'm doing my trades and getting my stuff set up. So I'm like when y'all throw these at me. This is good. So 1 second. Y'all might notice I'm unusually quiet in the mornings whenever the market's active. Airbnb did open on the bull side, at least of where all the pressure is. We have about a 160 level and higher somewhat support. But 67.5 is going to be a really tight resistance because that's where that net hedging is balanced out. So it's kind of sandwiched between those guys. But 67.5 being a clean break on Airbnb would be a run up at least to 170. There was a big shift. Market became slightly illiquid at least the start of Friday when it started selling off. And so whenever you see those kind of illiquid selling days that get caught up with like illiquid buying days, say like a break creates a gamma squeeze today, you would have 167 try to fill 170, but I wouldn't be taking it on any long side yet until 167 breaks. And of course, 167.5 breaks. And to me, that would be a decent setup to play out. Airbnb seems to be matching what the rest of the S&P index is doing, which is kind of relaxing from the last, I guess, how many days? Well, actually, no, Airbnb's been doing that for a lot longer. Yeah, so like maybe like 5 or 6 days, it's been relaxing. I don't see it as breakout potential just yet, but if we do get that 167.5, and like every day the number is going to change a little bit. But right now the index is doing exactly what I thought it was going to do, which was sell off and at least try to fill the gap. So once that happens today, if that survives, I think we might have a clean shot at something like Airbnb pushing if the index pulls it up, but not yet. It's still kind of sitting there waiting for that key level. Hit it sharp resistance today, so I think that guy is probably not going to go anywhere yet. So what was the next ticker? What was it?
I also real quick just want to cut in here while I'm up here. If anybody sees, I just posted from the Wolf account a post asking for people to get tickers. If you're listening, or if you have general questions on the market or anything like that, we're happy to answer those. We have the time today. So drop in questions or tickers or anything like that. I'm going to pin it up top in the space, but just go to the Wolf account. And also, the Wolf account is going to try to host 1,500 hours.
I'm probably going to wait this one out.
Oh, okay. Going to try to host a ton this year, so make sure you're checking them out. But okay, I got one for you, Richard. Best Buy, BBY.
Sure. Let me bring up that chart here, and let's see what we got here. So overall, I always like to take a step back, just kind of look at the past 2-3 years. How's the action been? Has the stock made a really strong run previously? And what's kind of the overall character? So just looking at the overall chart, this is pretty choppy and not one that really goes on super powerful moves and really trends nicely. So that's one negative for sure. And just looking at the recent like 12 months action, it kind of supports that here. We're just kind of up and down from 123 to basically 98, 100. And then we had a basically super strong rally up the 10 EMA recently starting 10-11 of 21. And then we had a gap down, and now we're just kind of basing it in downtrends. So any stock that's kind of below a declining 21 EMA and also below the anchor view at from the top of the base is kind of suspect in my opinion, and just isn't being accumulated at that moment. It doesn't mean that it won't work in the future. It's just kind of basing in and not on the move, which is when I want to be involved. So we'll have to see what happens here. It's rallying on below average volume back into that 21 EMA, so we'll have to see whether it can burst through that or just kind of fades and keeps on basing. But yeah, nothing too special here, in my opinion, looking at this chart in terms of trading the stock. And I think there's better options.
Okay. Thank you, sir. Appreciate that. Okay, we're getting a good amount of questions now. So everybody, I pinned that up top. You should see it. Go ahead if you have questions. If you have tickers that you want Chart to drop those in there, that's where we are going to be pulling a lot of these from. And once again, amazing panel we have. Most people that are up here are probably going to be up here with us most weeks. If you're enjoying, please click in and give them a follow. I mean, they're awesome. They're going to put out tons of content in 2021. We're going to do over 1,000 hours of Twitter Spaces in 2022. Okay, let's keep it rolling.
Wait,
Yeah.
1 second there. I just would like to say you said 1,000 spaces there, but 1,500 was the goal from the Wolf.
I said
I'm
over
expecting 1,500. You promised me 1,500. I'm holding you to that. Just saying, but we can
1,500
continue.
is the goal. That's the New Year's resolution, is 1,500 hours of spaces. All I have to do is average 30 hours a week for 50 weeks. And let's do that. Okay, with that being said, let's keep it rolling here. So first off, let's actually take a step back. So Matt, can you talk to us about overall look on the indices right now and what your feeling is of the market now that we've had a little bit of price action?
Yeah, absolutely. I think when I first started off while I was talking, the Nasdaq had run straight up and cleared out this 16,471. These are we have like a code word for it. We call them red lines, but what they really are illiquid points of the market where you see a shift in price because there's some abnormal buying or selling, right? And so what happens is the prices to rapidly drop or raise to find that liquidity, right? If dealers are taking the other side of position. So Nasdaq, whenever it rallied right out the door, right, it cleared out that level just to balance the imbalance that was sitting there from the other day. And immediately when the first time I was talking, I was thinking, I was like, I'm sitting out of the market to let it relax just to test to see if it at least fills this gap or does whatever it was doing as I was thinking it was going to come down. So as I was sitting here, market was rallying up. And I was like, maybe it might rally today, but I haven't made any trades. And my suspicion was correct that we did go and we did clean out and then we did fill the gap. One of my arbitrage indicators that I have is showing that the stocks are being liquidated. The basket's actually shrinking in value. So today is a day to sit out and at least wait and see what the market does. We've broken pretty much through all key levels, and the S&P 475 was the only level that I was hoping would hold for at least today. Nasdaq losing, or QQQ losing 400. That's a big deal. So I think I'm glad I didn't get caught in this one, and I'm just kind of sitting safely on the sidelines. This might affect everyone's calls today. So if the market is having that initial start of the year test, just to make sure it's not finding much lower lows, just to see where the buyers are, because I think everyone out there expects buying to come in. They just need to find that sweet spot where a price where things are going to come. So, some of the stocks like Microsoft just started just crashing right out the door, and it looks like Amazon's getting hit pretty hard too. So this is an interesting setup. So as far as tickers go, is there something you want me to run really quick? I'll share the Airbnb with the space. Then I just did that one.
Yeah, I do see the market really taking a nosedive here. Let's pick a couple of these. So I see people want SE, and MELI, MELI.
Okay. SE. Let me take a look really quick. So my thoughts, at least today in general, is that as long as today doesn't end up looking catastrophic, I think tomorrow is going to be the better day to start, at least for me, to start picking out things to enter in. I really want to see kind of how the year starts. I think this is just testing the waters. I'm not too scared of this big liquidation thing that we have going on right now, but some of these calls or any of these stickers I'm talking about right now, I promise you guys my thoughts on them will probably change tomorrow. So at least for right now, SE has a clear, it looks just like Airbnb. There's a 232.5 resistance. It snapped it right out the door and started pulling back. It's all bear side from there. So there's really no support. 210. There's some large in the money calls at 210 that might show support. There was a buyer there from 2 Tuesdays ago that's still active. So we'll see how that one plays out. Other than that, this doesn't look so good for C Limited. So next one that you have?
With MELI, MELI.
MELI. Okay, let's run it really quick. MELI. I am not familiar with this one, so this is Mercado Libre, correct?
Yep.
Okay. I'm just running straight off of the numbers here, so no familiarity with this ticker. I'm not going to do a what does the company do? You're breaking up thing. I really don't know. 1350, 1345 was a clean split. It has a large, wide range, and it's not really a clear. There's no real clear breakout. There's no real clear sell-off. So it has this really large range. It does have some bull support at 1300 that just broke through. There's nothing at all until it fills the gap at 1250. About 1260. Other than that, there's no upside. I don't think that this one is a dip. If I was looking to buy this again, not investment advice, this wouldn't be a dip I'd want to buy because we've lost at 1300 support. My hedge pressure calculation, 1325 is where sell programs have kicked on pretty actively. And then, of course, you had a really strong monthly support, which is for those 121 options that you needed to hold at 1350. So it just crashed through all of that right out the door. So 1300 support, 1325 resistance. So I think it's going to be like everything else this week and just testing the waters and consolidating. And so stocks like these, especially with large ranges like that, are coming from illiquidity. Clearly, there was a gap up 2 Mondays ago, and it's kind of looking at that gap like it wants to fill it. This is just like what the S&P just did. This is what the NASDAQ just did. So I think once all these stocks test those waters and figure out if they're really selling or not, they're just kind of undoing that end of the year ramp up. So for instance, like if you were short and you wanted to get out of a losing position at the end of the year, you're covering just to kind of get it off the books, and that pushed the price up. And now price is just kind of resetting for everything to where it was like the beginning of last week. So I would give it another day or two to kind of gauge this one out. There's really no clear indication. It's sandwiched between two very key levels. So.
Okay, awesome. Thank you. And right now, even with the words about SPY, it is trying to hold 475. It is green currently. For anybody that underperformed SPY last year, feel free to take a look at it. This year, it did go up about 26.5% last year. We'll see if it can continue that rage and rampant. It's that's following up on a pretty big year as well in 2020. It's up 111% now over 5 years. Okay, a lot going on there. Evan, I want to get you back into this. If there's any specific names or topics that you would like to touch on, we're coming up on, I guess, your point in time. I'm not sure about Stock Talk and Gerg. I think Stock Talk's still kind of getting back and oriented into everything that's going on. He was down on vacation, and then Gavin is doing his thing. I know I woke up early for CST for this, so hopefully that was worth it. And listen, everything's going good so far. I've actually not placed a trade except for selling AMD at the open, and AMD since then, it's kind of holding. It's up about 2.5%. It's kind of scooping the bucket a little bit here, but I'll take it. But most of those gains are gone also, as well as crypto has taken a downturn. Bitcoin into the 46,850-ish range. So that's kind of where it is. I'm seeing stuff like Tesla and Apple still up. Surprise, surprise. A couple of fighters out here in AMD, NVIDIA, and a few others. And then just a lot of downturns off the bat. But like we saw on Snapchat, Twitter, IIPR, that's a popular pick for 2022. Etsy, Square, Crowd. Crowd's down 5% actually already off the bat. That's one that I was looking at. Should I put gains towards the end of last year? I'm not sure exactly why it's falling off, but it's broken down through a couple of key levels. Okay, that's kind of some stuff off the bat. All right, we have still a bunch of names that have come in, so we're just going to continue to pull from these. And thanks again to the 300 plus people who are in here. We're excited to do all of 2022 with you. Already have about 10 spaces lined up for this week, and then a whole bunch more that's going to be happening. We'll be covering every topic from stocks, crypto, NFTs, anything that you can invest in. This is the place for it. We'll also be covering stuff like market psychology and a bunch of other areas. Okay, here, let's go. So, Richard, I actually would like to hear your thoughts on the VIX right now, as well as PL. That's Planet. That one was a popular one.
Sure. Let me bring up the VIX. So this is the volatility index. I don't use it too much. So actually, I wouldn't be the best person to ask. Maybe Matt has a better, view on this or how to use this tool, basically. But you are seeing a drop recently, and it is popping a little bit today, or at least it's up today. What was the other one? PL?
Yeah, Planet.
Planet. All right, so this looks like it was a SPAC that then had a recent gap down and is trading back near 6.15. So like some of the others that you wanted me to look at, this is still in a downtrend. It's stuck below a declining 10 EMA, 21 EMA, and 50 SMA. So net over the course of the past basically few weeks and months, it's not under accumulation. And I don't know anything about this fundamentally. Let me bring it up in MarketSmith real quick. So it looks like it provides satellite imagery data and geospatial solutions for companies, governments, and civil society. So looking at the sales growth, it's only about 12% and 16% the most recent quarter. So not a super fast grower. Looks like market cap 1.6 billion. Yeah, overall, it's just not on my radar because it's just not in an uptrend. It's still just basing. Maybe it's finding support near 6, but you never know. It could break that and drop to 3. You never know when a stock's been cut in half, whether again, it's going to basically keep getting cut in half or rally from there. And yeah, like what I've said with a few others, I think there's just better opportunities out there in stocks under accumulation and in uptrends.
Love it. So yeah, we will go to Matt for VIX, but in a second, looks like Apple's trying to set a new all-time high right now. Apple just came out in news that they have won a patent for through display wireless charging, which basically means that they have successfully copied another Android feature a couple years after it came out on Android, and that they'll be able to allow people to do reverse charging. So if anyone's unfamiliar, it's basically where you can charge someone else's phone kind of by touching your phone, or you can also charge like I don't know, like a headphones case, I guess like AirPods or something like that. Basically, not just charging your phone, but externally using it to charge other things. I've had the feature for about a year now, and I've never used it a single time. So I don't really think that it means a whole lot, but hey, to each their own. Okay,
That
so
didn't
Matt,
co- that came out on Friday or Thursday or something. It was on the
yeah,
30th, so I don't think that's why it's moving now.
maybe it helped. Maybe it helped it though.
Wait, can we look
Kind
at
of.
the charts though on Apple? I would love to kind of hear Richard or Matt's thoughts on whoever that was. I don't know if we've covered into it, but as an Apple shareholder, I'm watching 3 trillion and like seeing that kind of. And we haven't really gotten up to it. We've gotten close a couple times, but I'm looking for us to pass through that. Maybe if that's actually in the cards.
I love Apple. Apple's one of my big dogs going into the new year. I think that's gonna be one of the strongest companies. So the fact that you're long Apple, I think that's a good pick. It's clearly bullish. I mean, it's survived any negativity that all the other stocks on Nasdaq felt. It was probably one of the least severe of the fangs. So I mean, when we had that big selling last week, as far as just in general, I think Apple's got a good future ahead of them. They've got a lot of good products. The newest phones. Obviously, everybody. I mean, I went out and got the new one as well, just because the camera. I'm such a camera junkie, but like I don't see any I don't see any weakness with Apple. I feel like with the way the world is going, they've always been strong. They will continue to be strong. So I mean, levels 175. Apple is cleanly bullish from that going through even through monthly. I'm running my model for monthly on Apple, so it's super clean from there. So even on monthly options, there's buyers from 155 that are holding on for good. So that's a good play, I think.
Yeah, just stepping in. Yeah, I completely agree with Matt. I think the chart is super strong. It's just holding that rising 21 EMA. And if you just look at this compared to a Roku or some of the other names you've asked me to look at, this is in a clear uptrend. It's being accumulated, and that's when I always want to be going long. And just today, we're seeing a nice reconfirmation off the 10 EMA into new all-time highs. That's the most bullish sign you can have. And taking a step back, you can basically see that starting in September of 2020, we kind of had almost an entire basing process where we formed a base from 9/1 to January of last year. Then we formed another big base, and then another base recently, which completed around, looks like November of last year. So we're kind of just been basing for maybe even the last 15 months or so, slowly climbing higher above a rising 200-day moving average. And then we kind of had a change in pace, acceleration with a breakout on 11/17 of last year. So this looks pretty good. If you own it, just hold that until it breaks the 21 EMA. But definitely for a swing trade today, early on in the day would have been a great spot to enter.
Love it. Matt, thoughts on the VIX?
Thoughts on VIX, VIX?
Yeah.
So the VIX today, my key monitor for VIX is the VXX. We like to look at derivatives of any kind of index or measurement, like a VIX, for instance, by looking at the any ETF or tradable vehicle that has very liquid options chain. VXX is clearly always my go-to. So these levels are going to be referencing VXX. I'm sure it's similar in price to the actual VIX itself, but 18.5 on VXX, it was my level of caution today. So those are my hedge pressure levels. That's where buy and sell programs have their highest battle. The gamma balance on the other side of market maker trades is what we monitor. And when that's positive, you start to see abnormal long pressure. When it's negative, abnormal short pressure, just because the battle of delta balancing is fought at that level. So 18.5 is the key level for VIX. Any runaway break on VIX can cause unusual volatility. So what's weird is that while we did see the market just reset and fill the gap, the volatility didn't ring itself unusual. So we're still clean on what we call VIX. VXX 18.5 is that key level today. Any break of that is going to be caution for the market. All of my arbitrage indicators that are measuring all the stocks, while Apple and maybe I think like Nvidia and Facebook are looking okay, the Nasdaq itself and the S&P itself are both in decline as far as the individual stocks being hedged. So there's going to be some more selling pressure, I think, on the index, despite some of the clear winners that we have, which could ultimately push VIX past 18.5. Any break of that today, we call unusual volatility, and that's always my flag that stood out. I don't like to trade the index when the volatility is unusual, because the market becomes slightly illiquid and it's harder to manage positions, especially when it drops so fast. But as far as right now, I think we're pretty clean on that. Let me see if I can convert that really quick for you to VIX. If you guys are looking at VIX, they are very similar. They're off by about 0.6 points. So if 18.5 would be the equivalent of, I don't know, 17.8, I would say. So we're about, 17.9 or something like that. So we're basically right there. I would say, at least for now, this volatility isn't deemed unusual, at least as far as the market's structure is. But I just don't like this rapid gap fill, and of course the fact that the indices are both losing steam as far as my resilience measurement goes. It's not getting better, so I think we might break through that, and we could have a volatility event today. But at least for now, nothing yet, so nothing alarming. But that's that level literally front and center on my screen, so I'm watching that one.
Awesome. Let's roll real quick with the calendar and then roll over to Juicy. Just for anyone who's unfamiliar, this is a great time to join the calendar so you know when all of our spaces are going to be for 2022. This was a product which we created in 2021. We had 2,000 plus investors join in 2021. And essentially, all it is basically, we know that you're busy. You don't know when all the spaces are going to be. You don't want to be on Twitter all the time having to look at the top of your timeline. So what's the easy solution to finding the spaces that you want to be at, since they do confer a lot of valuable information, and that is being on our Google Calendar. It's completely free. All you have to do to get on it is DM either the host or the co-host, Wolf, for Stock Market News, with your Gmail preferably, but any email does work, and just ask to be on the calendar. That's it. It is free. You will be able to see when every single space is happening, who's speaking on those spaces, and afterwards we will put the recordings into the notes on the calendar. And again, this is not going to clutter up your timeline or your calendar. You can toggle it on and off on your personal calendar, so you don't have to see it if you don't want to. And if you don't like it, it's free to unsubscribe. It doesn't even send us an unsubscribe message. No harm, no foul, but you're likely going to love it. So if you're not already on it, go ahead and just DM us right now. We'll get you on that within 24 hours, and you'll have access to know when all of our spaces are happening. And trust me, there's a bunch of them, so it really is super, super helpful. Evan, anything you want to add to that?
No, that was pretty perfect, honestly. Like, you're in the spaces right now. Clearly, you enjoy being in these. We're putting out a bunch of information. Gav literally told you his goal is to be streaming at least 30 hours a week on spaces. And I'm doing a bunch of that as well. Stock Talk Weekly, Gavin. Everyone's going to be doing stuff on that calendar. So, if you enjoy spaces, it's something you really do got to be on. So definitely DM Stock Market News or Wolf Financial to get on that.
Love it. Yeah, and there's over, like I said, over 2,000 people, including people who work at Twitter, hedge fund managers, CEOs, people with 1 million followers, all types of people are using this. It's a very valuable tool. Okay, Juicy, how are you playing this market in this first trading day of 2022?
Less is more, man. Again, guys, thanks for having me on. Big shout outs to everybody on this panel. Always a pleasure to be here with everybody. So, yeah, for me, anytime you guys are looking at a gap up in the indices itself, expect some chop, right? I mean, when individual tickers gap up, that's one thing, but when the whole market gaps up, it's a different ball game to be played, okay? So for me, executing today was less is more. So we had a QCOM trigger that went off. I was in and out, like defense. I took 25% on that. Flipped it up, played SPY on a 15-minute orb, got short, took about 70% on those puts, and that's it. 2 for 2 on the day. And for me, I'm just going to sit here and let this marinate. I didn't chase Tesla. I see a lot of people on Twitter, where do we buy Tesla at? And what you're seeing is a giant gap up. When they gap up, like that, I call that a level 3 gap. And anytime you get a level 3 gap, expect a lot of chop, if not a move in the opposite direction. So definitely today, you really want less is more. Now, looking at SPY on the SPY on the day chart, coming into the day, I was already like, look, this isn't the bullish market that you really want to see. We're still range bound, right? With that being said, everybody, especially the newer traders, are expecting the new year, I guess, Santa rally. Everybody I'm talking to right now is like, we're expecting SPY to move up. But for me, until SPY breaks 479, I'm going to say we're sideways. I have no trend. So wait for SPY to break that 479 before you start swinging these big or long positions. And of course, if we break that lower day from the day, that 473, we're stuck in that range, 473, 479. Expect SPY to move lower if we break that low side. We call this the middle. Don't diddle in the middle. All right, you get chopped up real quick. All right, so make your trades quick, get in and out, take your piece, and keep it moving.
It's awesome stuff right there, Juicy. Appreciate you coming up here, man. And with that, we have our guy Danny up here as well. So we'll send it over to him for his thoughts on today, if he's made any moves so far and what he's looking at today.
Good morning. Good morning. Hey, diddle, diddle. Don't fiddle in the middle. I like that, Juicy. I might have to steal that. This morning, semis. It's all about the semis. I think out of all the semis, like TSM looks fantastic. It's about to break a high from November, right around 128. So watching TSM, but this morning I took a trade on Nvidia through a 300 again. Feels like deja vu. Same trade last week. Really beautiful move. Came right into my 306 and change. Got probably about 35-40% on those 310s. The only other trade, the reason why I was late, I was managing a trade on Apple. Had a nice trend line breakout over 178.50. And it's right at 181. Watching Apple through 181.30 for an all-time high test. That 3 trillion market cap might come today. But otherwise, the market generally right now is looking a little flat. The indexes are looking flat. And so, like Juicy, when the indexes are flat, especially with like a big gap up, I'm not trying to take too many trades. I'm trying to take more quicker early morning trades and just kind of play it a little by ear. Also, the bond market is closed today, so that also can affect the tape. So just really observing the market this morning and not necessarily trying to jump into anything as far as a swing, but yeah, quick trades. I mean, TSM just breaking that 128 mark right now, so continuing to push higher. Really nice move on TSM today, about 6.5%. And same thing with Tesla. I did speak about this over the weekend on my weekend review that, with the delivery numbers that we're going to gap up and don't chase it. And sure enough, the premiums were really inflated this morning. So I'm not even trying to look at Tesla. I want to see maybe can we close the gap or partially close the gap this week, but not really trying to chase Tesla at this moment. But it does look really good. And EV, obviously, a lot of EV stocks posted some delivery news, and a lot of EVs just popping right now. So I think there goes Nvidia finally breaking its downtrend line here over VWAP. So Nvidia looking like we might test high a day. Over high a day, looking at 310, 311 on Nvidia. But yeah, overall, I think semis look really good. That's where my eyes are going to be today.
Awesome. Great stuff, Danny. And now with that, I think we'll get back into going into some individual names. So now that we have you guys up here, we'll send it over to Juicy. If you want to just bring up Ford, ticker F, and would love to hear your thoughts there, as a few people requested diving into that one.
Did you say Ford? Wait. I'm not sure if I cut out.
Yeah, Ford.
Okay. Go. Give me 1 second. Pull this up right now. Caught me on the go. Catch it on the fly. You catch it authentic. Pulling up right now. So Ford, I actually had a trigger go off at so 1213 was the high of day. 2130 was the trigger. I got a Fibonacci extension measured from 1122 to the low of day on 12/6 with 2213 as the target. So 2130 is the trigger, 2213 is the target. We got a gap up above the trigger, so I'm looking for it to extend to that target. I'm actually bullish here on Ford. That's a wedge break.
Awesome stuff, man. Thank you. And now we'll kick it over to Danny. Would love to hear your thoughts on Zim, ticker ZIM.
Oh, love Zim. I've had 2 trade alerts on Zim over the last 6 weeks. I had an entry today over 59.29 with a 1272 extension at 67.30 and a previous high previous high at 61.53. So yeah, Zim looks great. It's an integrated shipping service. So shippers have been moving. And we are coming up against that previous high at 59.29. So we are slightly pausing here, but overall still pretty bullish. I think once we crack 61.47, then we've got a free shot up to 67.60. And then my ultimate target will be around 74.47, which is a 1618 extension to the upside. Just really quick on Ford, the flow has been relentless on Ford for quite some time now. So I do really like Ford and concur with Juicy on his Fibonacci extensions as well.
Great stuff, man. And now we'll kick it over to Richard. We'd love to hear his thoughts on SOXL. There's been a lot of talk. Obviously, we've mentioned it a lot about semiconductors taking off. So SOXL is the 3 times bull shares there. Would love to hear your thoughts on that.
Yeah, exactly. So yeah, this is the 3X ETF for semiconductors. You had a 2-2 reversal here through yesterday's high, and that would be at 70.10. It's right now at 71.46. Yeah, if you don't like playing individual names and want some exposure to the group and some pretty accelerated exposure at that, this is definitely one way to play it. Or of course, you can just do SMH, which is just the normal semiconductor ETF, which is also it kind of trades like a stock, so you can get plenty of movement here from this ETF. And this also had SMH 2-2 reversal here through yesterday's high, 312.04, now at 314.93, actually 315 here. So both of these look pretty good. They're within bases, and we're just getting a push out of these handles here and maybe the start of a move. And I'd love to see this get into all-time high ground. I think that'd be really bullish, not just for semis, but also the growth space in general.
Awesome. Great stuff there. And now we'll kick it over to Matt. Would love to hear your thoughts on Shopify.
Alrighty. Continue with Shopify really quick. I was looking at the indices whenever it's every time you talk to me, the indices have flip-flopped a different direction. Now we're kind of back to where we started. The gap we're trading now higher than the gap up we had at the start of the day in futures. So this is an interesting way. I think market's stabilizing, which is good. I was actually about to close everything down. I was going to convince myself to not make any trades today, just let this all kind of settle out. So now I get Shopify loaded. I'm taking a look at it. 1400. It's kind of in that all signals are bad for Shopify. We've got monthly balance 1405, weekly 1400. So both of those guys pushing down. We have abnormal. Obviously, the options show 1410. So it's all selling from like this abnormal imbalance that we have. So 1410, and it's really got to have like a 1420 breakout to see anything positive on this guy. So I think all I could say for that is looking on any downside target. Like I said, Shopify's not anything I'm holding particularly, so I have no interest in this one. But I'm just kind of looking. There are some. I'm looking for any gaps that haven't been filled. Yeah, so I don't really see any support period, obviously internal to this 1450, 1275 range. I think that Shopify could test those lows. It looks like it can. I just reran my model to try to see if there's anything on the monthly side, and it doesn't look like there's really anything until 1200 that shows any kind of support on the longer term positions going through the 21st, which is expiration for January for monthlies. So 1200 could be in the target for Shopify. Absolutely. As far as fundamentals, I don't have any information on fundamentals. These are clearly just this levels are just looking at existing positions out there, and the options insurance was on the position. So as far as me talking about some of these, I'm just looking at positions. So that's where I see support. Other than that, nothing looks clean on that one today. So I think that guy's coming down.
Cool. Great stuff, Matt. And real quick, just major shout out to all our speakers up here. We really have the best in the business. So everyone do yourself a favor, give everyone up here a follow. So we have Richard, Danny, Juicy, Matt up here, put out great stuff all the time. Also stock market news, Bullish Rippers, Gov. So take a second, follow them. You will not regret it. With that, we'll keep it rolling here with some names. We've gotten a lot of interest. A lot of people want to hear GameStop, good old GME. So we'll kick it over to Juicy for his thoughts there.
I have not seen this thing in forever, man. I was actually on the Spaces, man, and GME is its own topic with this whole short squeeze thing. I think the move already happened. I don't want to get nobody heated. So for me, I got this in the range. All right, so you guys look at the chart. This is what you got to do. Draw a straight line through 1213 at high day, right? And then now you see 1214, that lower day, draw a trend line from there connected to the two wicks on 1227, 1229. That's what's called that's a wedge. If price can break that 160.56, which is the higher day from 1230, you'd be looking at a breakout, and you technically have room up to what candle was this 181, which is 12.8. Now, in addition to that, to make that confluent, you got the 50 to 100 and 200 moving averages, simple moving averages, all in the same area. So that's actually a clean setup. You would need the break of 160 with volume to push it right there. But me personally, I think this is a day trader stock. I know a lot of people are in it looking for the moon, the ride to the moon is what they call it. I don't think that's going to happen. I think that you need to trade it like a day trader, here in and out.
Awesome. Great stuff there, man. And now we'll send it back over to Richard for your thoughts on Intel, ticker INTC.
Sure thing. Let me bring up that chart here. All right. So yeah, this is kind of going back to what I was talking about looking back at the character over the past 2 years or so. And this has just been very, very choppy, just kind of going back and forth, no clear trend. And that's super surprising because of how strong in general semiconductors have been over the past 2 years or so. This has really been underperforming, and actually looking at the relative strength line here, which compares the performance of Intel to the SPY, this has really just been declining for basically the past 2 years, really since the March correction in 2020. So yeah, this is not the semi I would choose to play if I was. You do have a little bit of a move today, so maybe this can change character. But just given how it's performed and how choppy it is to trade, it's just not really on my focus list. I think AMD, Nvidia, those are the kind of liquid leaders that I would go to. And just in general, there's better options within the semi space.
Definitely agree. Cannot have said it better there. So really solid insight. Next up, we'll move it back over to Danny. Would love to hear your thoughts on Snowflake, ticker SNOW.
Ooh, I really like Snow. It's got a beautiful cup and handle setup right now, really long-term cup and handle off that post-IPO high at around 433. We hit a low of that cup on May 13th at around 184, came right back up to the cup rim at 405, and now we're hovering around 328, still in that handle. So yeah, I mean it's stuck in a range. It's not tradable. I would say wait probably for either the break of the handle, which might be around, let me see, 362.50. That possibly could be an entry, but right now it's just consolidating. I think we just have to wait for this handle to form. It's still forming. Once we start breaking the handle, and we start seeing series of higher highs and higher lows, and all the momentum indicators pointing to the upside, then I'll get a little more excited about it. But right now, it's just kind of wait and hold pattern. If you go onto the weekly chart, we are pulling back down to 50 RSI, and we had a MACD cross under, and our TTM squeeze that fired back in August on the weekly side has dissipated and is starting to come back down. So I think momentum right now is still neutral on Snowflake. So like I said, I would just wait for this. There's no reason to rush into it. It's got a pretty big range from the post IPO. We are still holding over that IPO high at 317, so I'd want to see that level hold. I think underneath that, it's probably less interesting. But if we're holding over that level, then again, I'd be watching that probably 360 range, 354 to 360 for a handle breakout. And then ultimately, I want to see this close on the weekly over 394. That's our rim, and I think from there, I think we're pretty good to test those all-time highs at around 429.
Great stuff, Danny. Thanks, man. Next up, send it back over to Matt. Would like to hear your thoughts on Snapchat. A lot of interest there.
Snapchat. Let's run it. Let's take a look at it. All right. All right, Snapchat looks right out the door. I'm running in the app really quick. Looks sandwiched, but not bad. Snapchat looks like 47 is my support level for there. There's some clear resistances at 50, 53. So at least for now, Snapchat looks good. The problem is that we have this net negative delta hedge sell program, clear victory, hedge pressure 50. So it's kind of one of those things where, like almost all half of the ones we talked about this morning, you've got bull side market of old positions that have held through the year, still have calls on some of their longs. It's like people that buy the stock and just hold through the volatility and purchase calls. But you also have this short-term imbalance that's coming through from the end of the year selling, where you're getting this resistance coming out. So Snapchat, just like some of the other ones, very wide range, 50 at the top. And you got 47 is the only bull support at the bottom. So it's backed into its lowest support that it has. Losing 47, Snapchat really has nothing until 40. Fundamentally, I was never a big long on Snapchat. I just never, or sorry, on Snap. I don't. I just never was really thinking it was going to go anywhere, and it just still doesn't have that look to it. While it's hanging in there, it it's not something I play, but as far as the levels go, it's just that big wide range that it's had for, I mean, the last month or two. So 50 to 40, and I don't think it's going to really break out from here. It doesn't look like it yet. So
Awesome. Thanks, Matt. Back around to Juicy. Would love to hear your thoughts on CrowdStrike, CRWD. All right, we
Yeah,
could
he's probably on
send
it.
that. Yeah. He's
Was that me?
Yeah. Also, right before that, it looks like Pfizer just got clearance for another one of the vaccines. They are down. They were down 4% on the day. They're now down 2.8%. Just potentially keep an eye on PFE to make some moves back towards the green if they can get a bounce here off this catalyst. But yeah, you can throw that over to Juicy again. I think Juicy, that was CRWD.
CRWD. I've been watching TSM since Danny called it, and this thing is just a beast. So CRWD is crowd. CRWD, I'm trying to get it going. All right, so CrowdStrike. Again, this is pretty much a wedge. I'm sorry, you guys seen Bucky. Bucky is my little puppy. He joins me. You might hear him whining in the background. But long story short, I got a big chop box between 213 and 185. I am not touching crowd until we break out of that chop box, right? Because every day it's like we're up, we're down, we're up, we're down, we're up, we're down. If you're in some options, you're gonna get chopped up. So wait for that break of 213.37 to take this long. But right now, this trend is awful. It's completely sideways. I would completely stay away from this.
Definitely agree there. It is not looking too pretty. And speaking of TSM, we'll kick it back over to Danny. Would like to hear your thoughts and what you saw there that piqued your interest.
Well, first off, semiconductors were out of the gate strong. So obviously, like for me, I'm more of a MU NVIDIA semiconductor trader, but I always look at AMD, TSM, and some of the other names that are semiconductors. But yeah, I mean, it just the setup was nice. If you go up to a daily chart, it's got a beautiful symmetrical wedge. It did gap up this morning, but I was looking for a break of 124.78. We got that. My target was 127.30. We hit that, and now we're just absolutely beasting. It's not slowing down, and it's already 10:30. So watching this possibly for a pullback. It looks really good, but it looks extended on the lower time frames. But yeah, I mean, I think from a setup perspective, TSM has probably had the most prime setup for semiconductors, and now it's finally starting to break out. And so its upward range, we've got a high back in March of 21 at 142. So, it's got a pretty decent size move to the upside. And what I'd be watching is possibly we're right at the 618 retracement at 129.13. Price currently is at 129.44. So I would expect a little bit of resistance here. But right now, it just looks like it wants to continue higher. So upside targets for me would be 139.90. I'm sorry, 134.98, and then 142.43 to hit those highs from February of 21.
Awesome stuff, Danny. Thank you. And now we'll send it back over to Richard. We've gotten a lot of comments about plug power. So if you could take it away with ticker plug.
Sure thing. So taking a look at this chart, it had a massive run in 2020, super powerful mover, and then it just kind of started a really long basing pattern, and still overall in a downtrend and just kind of going sideways. So we are maybe finding support here above 27 or so, but we're still kind of forming a bear flag here under the 10 EMA, declining 21 EMA, and looks like the 50 SMA is curling over as well. So this to me isn't really a focus. We're well off all-time highs and about 40% off the near-term highs that were set in late November. And for me, this just has to get back above the moving averages to be interested and really start a move back towards at least the intermediate highs around 45, get back above a 21 EMA, 50 SMA, that type of thing. If we do get kind of a nice breakout through kind of the 30 level, that could start a potential move like that back towards the moving averages. And let me pop an Anchor VWAP on those highs here. So that value from the recent highs from 1122, the Anchor VWAP is all the way up at 34. So still looks like the sellers are in control here, and it's just going to need a little bit of work before it can really start another powerful move. And just for me, I like focusing on stocks a lot closer to all-time highs than PLUG at this moment.
Well said there. Good stuff, Richard. Next up, back over to Matt. Would like to hear your thoughts on Verizon.
Verizon. All right, let's go. And as my every 5 minutes, let's report into the flip flopping of the index. Market has basically turned its leg down again. So I think I'm going to. Let me look at this one. Verizon, right? Okay. I think so. I'm so glad I'm not making trades today. This is all I'm saying. Like, I know I'm very bullish. I was very bullish last month. I'm very bullish all things. And by the way, TSM, that semiconductor, I was reading there was a report that came out that said expected huge boosts in sales. I think that stocks like Apple being strong, that's going to pivot very heavily into a lot of the stuff. Just to go with what Danny and some of the others are saying this morning about it. I think that semis is a real strong play going into the new year. I think that's going to be the big lead off, and if that carries big tech, I think that's what's allowing me to want to be bullish. As long as today survives, I think we should be fine going forward with that. But I agree with what Danny said. I mean, I have some really high targets on TSM as well. It's a great play. So Verizon right out the door. Verizon is a 52 and a half sort of support range. Any breakout to that, there's really a nice bull run, probably potential at least to fill in that initial illiquid selling we had on the 8th of October. Kind of takes you to about that 54 and a half target. I'm like kind of eyeballing this one. Yeah, about 54.3. I think Verizon looks really good. I think it's had a little nasty kind of tail end of the year. It's been selling, and it's also been somewhat parabolic. So in reality, you're actually seeing people on the long side getting squeezed out. You always see the shape of those sell-offs, right, where it kind of looks like it kind of is like a shark fin where it just curves and it falls faster. You're just seeing people getting squeezed out of positions. It's not really just like mass liquidation. It's just like a slow burn. And I think the way that we close out the end of the year, you can see that the shorts covered, which is just like everything else. People are getting out of positions at the end of the year, whatever side we have. So we might have some resetting of that last little bit of covering from the last week of the year. And if we do, obviously any downside targets to that, I mean, in reality, losing this 52 and a half kind of area it's going to pivot very heavily. I think this is one that I would kind of wait on just to see if it falls to 50. But at the end of the day, from here, it's just sitting kind of pretty and flat, and it really doesn't have any boost to either side. But if you do get a nice clean break of 52.5 today, there could be a push. So those levels I talk about, that what it causes or can trigger a short squeeze. So since we're trading very heavily kind of below that, volume's really high below that, especially the gap up compared to the rest of the gap ups we had was very weak. It did break through highs, but it's not too promising, at least for me today. This is one I would sit out on 100%, at least for a week or two, and let it figure out what it wants to do. So.
All right, sounds good. And again, we have about 400 people in here. Thank you for tuning in. If you're liking what you're hearing, check out all our speakers. We got Juicy, Danny, Matt up here putting out great stuff, Richard, Stock Market News, Gov. So give them a follow. You will not regret it. With that, we're going to do one more go around with the stock names. And then after that, we're going to talk a bit more macro. So we'll send it back over to Juicy here. Would love to hear your thoughts on Microsoft.
That's MSFT. All right,
Yep.
hold on a sec. Pull this thing up right here. All right, so Microsoft, man, this thing is it's ugly. I'm not gonna lie. So I got this inside of a trend. I got this inside of a wedge. So if you connect the high day, which is all-time high from 1122, connect that trend line to 1229, draw that thing straight out, and you can connect the lower day from 1027, wicket to that wick at 12.3, and into the cluster wicks at 12.17. You got a symmetrical wedge. So it looks like we topped out, pulled back into the 50, and we're dealing with the 50 right now. So we're stuck in between the 50 and the 9 EMA. So when the daily's doing that, I stay away from it. So I'm neutral across the board. If Microsoft closes below the 50, look for that to pull back down to the 323 area. If we can get back above the 9, I'd be looking for this to retest the 344. But right now, it's just drifting, and I don't want any parts of it.
All right, good stuff there. Now back over to Danny. Would like to hear your thoughts on ticker MTTR. That's Matterport.
Ooh, good pick there. Yeah, so Matterport for me, this is more of a long-term speculative play. Talking about the metaverse, for anybody unfamiliar with their platform, they are a hardware software company. They're big in VR, like virtual tours of homes. So think about, during the pandemic, real estate shut down. People still wanted to sell their homes, but they didn't want to do in-person meetings. So a software hardware combo like Matterport allows them to do virtual mapping of their home. And now, if you take that technology and you think about virtual reality, you think about VR space, AR space, and the metaverse on the whole, I think this company is well poised for the future. But we're still near our IPO. We just IPO'd early last year in February, so we're still above our IPO base. But it had a nice run to 38, came back down into its 1-2 channel here, right at $20. I always look at these round numbers as psychological levels. So they're not necessarily technical levels, but levels like 20, 50, 100, 500. Round numbers are always going to be psychological levels that traders watch. And so looking at this level that we're at now, I mean, I'm not really super interested in getting in here. What I would watch for is if you anchor volume from its IPO, we've got a little bit of a shelf that we're sitting on, which is right at 2011 down, excuse me, down to 1815. Excuse me. And we have on the daily chart, we've got a TTM squeeze setting up. So not saying the bottom is in, but the temporary short-term bottom might be close. I just watch this to see if it holds 20. For me personally, it's not a stock that I trade, but it's a stock that I hold for long term. So I always look for pullbacks and areas of confluence that I feel might be good areas to add. Like I'm looking at 1756. I'd add probably around there a little bit for the long term. And of course, I'm not a financial advisor and this isn't financial advice, but I believe in the technology. I believe in the company, but of course, you should all do your own due diligence. I'm just looking at this from a longer term perspective, 3 to 5 years out. The technology is there, the hardware is there, the movement is there. Obviously, with Facebook changing their name to Meta. So, is it a flash in the pan? I don't know, but what I do like about this company is that they've got their claws deep into the real estate market, and of course, real estate is one of the hottest sectors right now, going back probably the last couple of months, and certainly from 2020 through 2021. So, I would just keep a really close eye on this ticker.
Great stuff, Danny. Definitely an exciting potential play with the whole metaverse trend. So definitely one to keep an eye on. Next up, we'll send it over to Richard. Would like to hear your thoughts on a crypto miner. We have a lot of interest from some viewers in SOS.
SOS, let me bring that up here. This isn't one I'm super familiar with. Let me bring it back to a weekly chart. So overall, this is a penny stock. It looks like trading at 0.87 cents. I usually like to focus my attentions on stocks trading over $10. Also, just a lot more liquid stocks. This only has a dollar volume, about 6.3 million. And right now, it looks like it's just in a overall downtrend since a recent peak in February of last year. So overall, yeah, not really one to touch. Just stuck in a downtrend right here. Looks like it's had some short-term short squeeze pop type moves, but that isn't really my preferred setup or way to trade. So it's not really a touch for me. And it looks like it's pretty close to breaking a recent, not a recent low, but going back to 415 of 2020, you had a low of around 0.83 cents. I'm not quite sure if I'm right on if I'm on the right date. But if it breaks that, it could revisit the all-time lows, which isn't a good look if you're looking to trade long. So right now, just looking at all the time frames, downtrend on a monthly, weekly, and daily, and not a focus on me for going long. And just in general, because of its liquidity, low price, not really a focus of mine in general.
Awesome stuff. Some really solid points there. And now we'll send it over to Matt for the last ticker in this segment. Would like to hear your thoughts on a good old meme stock, ticker NAKD, and that is Naked Brand.
NAKD. Let me look at this one. Yeah, I've never pulled this up before. When you get into I'm going to be the worst person to talk about this one. I promise. I have no experience with it, and in the penny stock realm, what our app looks at, we look at positions. There's something that's showing up, but it is just so bland. I guess when you get down to that $5 and $10 range, you don't get a lot of liquidity in a lot of these stocks as far as options go. So we don't really get a good read on them. So I kind of tend to avoid them personally. So unfortunately, if you can throw me another one, but this one I have nothing to say about that one. I have no experience with it.
Gotcha.
Kind of 4 numbers, yeah.
No, so yeah, I guess if you have any thoughts on IONQ.
Yeah, I remember we talked about this one. This was from a couple weeks ago. It's nice and strong, I guess. 1675 was a great launching point to push. We have a 20 resistance, so it's nice and far. There's big breakout potential, I think, on this one as far as it pushing through at least today's highs. There's some clear resistances, 18. And then you have about like an 18.5, which is that big sell-off we had from last Tuesday. I think being internal to those candles, I think both of those have the ability to test as long as we keep pushing. That 1675 bounce this morning was really nice and clean. It's still also, and these go, I'm looking at the monthly expiration. So as far as going through the 21st, any breakout play from a 20 is a nice push bull run. And that's 15% away, I would say. But I think it's clean. I think that's a good one. And also, if I can add to, we were talking about Airbnb this morning. Airbnb just flagged about like 30 minutes ago after we talked about it. It actually broke through one of those key levels. So Airbnb is kind of running today. I would take a look at that one if you guys were talking about that one. We had that kind of 167. I think I posted it on, I shared it with the space. And so Airbnb 167.5 breakout. That guy's going to run today, it looks like. So I'd keep an eye on that one.
Oh, awesome. Thank you, Matt. All right, back in here for a second. Also, I see Luke in the audience. Luke, if you want to come up and speak, feel free to just request. Joe will get you up here. Okay. Thanks for everybody that's been tweeting at us and tweeting us tickers and names we've Been analyzing for over an hour now. This has been really fun. Would love to talk some macroeconomics. I'll probably get booted during it, but I think we could have a conversation. Maybe Danny, maybe you want to start out just things that are on your radar for 2022 from a big picture. Things from the Fed, inflation, the pandemic. What are you looking at big picture that's going to affect, your trading?
Sure. So, talking about the pandemic, obviously with Omicron, uh, I know more people now than any previous variant that have gotten Omicron, and I would say probably 50% of the people that I know that have it are basically asymptomatic. So, could this be the last throes of coronavirus? Possibly, right? We just don't know. And so honestly, we just don't know what we don't know. And so we kind of have to just go with the flow on this one. How that affects the Fed in their 3 interest rate hikes potentially that they're putting on the plate for this year, I think is anybody's best guess. I'm really interested to see what's going on with small caps. I mean, obviously 2020 was a monster run for small caps. 2021 has really just been a huge consolidation year. So, there's a saying that we use: the longer the base, the higher the space. And so, if IWM and small caps can start to break out, I think that bodes really well for the rest of the market. But yeah, I mean, I think that really remains to be seen. Of course, still watching growth. A lot of tech stocks look kind of broken. So I think we're gonna have a very interesting year, and I know that's probably just a term that probably a lot of people are going to throw around, but 2020 was interesting, 2021 was interesting. I think we're just in for another very interesting year. And so, barring any wipeout of coronavirus, we've moving on. I think it's just going to be choppy. I think we're going to continue to see money rotate between sectors, between individual names. I think for me, the name of the game is focus on the individual names. Find the sectors that are moving, look to see where the money is flowing to, and find the names underneath the hood that are showing relative strength to the market. Like, for instance, Apple today, right? The market is choppy. Apple's at their highs. So that's for me my approach. It's hard to look a month down the road, 3 months down the road, 6 months down the road when you don't know what we don't know. And unfortunately, that's kind of the situation that we're in, and that's the situation we're going to be in as long as we're living with a pandemic and the Fed looming with their potential interest rate rises. So yeah, I know that's kind of a deflection on an answer, so to speak, but I think we're all kind of in neutral, just waiting to see what's going on.
Yeah, definitely good points all around. Would be nice to see some finality to this, but not totally bullish on that. And then, yeah, definitely agree with movement towards Apple. I actually, while we've been speaking, I grabbed Apple 180 calls, weeklies. So would love to see that trend continue in Apple throughout this week. Okay, we're going to kind of give everybody just a moment on macro, and then we'll go to Evan for earnings after that, and then we'll do close up after that. But before we do all of that, Luke, we brought you up. We'd love to get a few minutes on just your overall thoughts, including, macro as well as your daily perspective.
Yeah, thanks for having me. I've been listening to the space this morning, and it's been absolutely fantastic. So everyone go give the speakers that have been up here all a follow because they're freaking awesome, and these spaces continue to deliver. But either way, I take a look at the market today, and what I see is I actually just dropped a tweet. I see energy, those cyclical names, financials outperforming today. I see some of these growth names definitely not performing the best. I look at CrowdStrike, I look at Asana, I look at Affirm, and they're not performing the best. More of this choppy action in most of them, which I'm not all too surprised about. So that seems to be what we're getting when it comes to these more speculative growth names. Docken, Upstart, very similar price action. So, in that space, definitely not the best performance. What I'm noticing today is these best of breed names are outperforming. So your FANG names, of course, are outperforming, or at least the majority of them. You have Apple moving to the upside, Amazon, etc. I see Nvidia and AMD performing pretty darn solid today. I've actually been trading in and out of Nvidia this morning, and that hasn't been all too bad. I see financials outperforming pretty darn well. I take a look at what's outperforming within the financials, and I do like what I see. You know, I see the best of breed names within that space: Bank of America, JP Morgan, Morgan Stanley, Goldman Sachs. So it really seems to be kind of like a best of breed day, in my opinion, within the sectors that are outperforming. So I really like to see that. And then, you know, real quick, just on the year, I very much am 100% agreeing with everything the previous speaker said, just kind of sitting neutral here, waiting to see what is going to happen. You know, one day isn't going to tell the entire story. And I believe this is going to be another just very volatile news when it comes to macro events and things that could affect the market. You know, we are still dealing with the pandemic. We have these potential rate hikes to look ahead to, and that's definitely something to pay attention to. And you look at the outperformance today, or at least the sectors within the market that are outperforming, and those all bode well, or would bode well, with some rate hikes. So it's all something to pay attention to, but that's kind of what my eye is on at the moment. I'm a bit surprised by the weakness in real estate, but we are seeing it, and maybe I'll eye like American Tower in there, because that's always been one on my list. And then one name of interest that I am watching just to round out is Mosaic, ticker symbol MOS. If you look at the daily on that, it's looking pretty darn solid. I'm liking what I see there. So it's just something to pay attention to. It's a name that is outperforming today, and the daily chart, if you go to like the past 6 months, it's actually forming up a nice cup off of that 43.24 high. And after pivoting into this 9 EMA, it looks like it wants to move higher. So I am eyeing that for a higher move, but that's really what's been on my list. And thanks for having me up.
Absolutely great having you here. And good points there. I've got my first dose of regretamine, you know, selling AMD this morning, up 2.5%, and now it's at 5.22%. So yay, about 100% there on the table with the options. But life goes on, and a win is a win. As we talked about, I've been following your strategy. You see 30%, you got to take 30%. And then some good other points there. But yeah, great outlook for 2022. Thank you, Luke. Luke's a great follow. I know we've been putting out tons of content in 2022. Appreciate you hopping on up here. Okay, going to some other people from some macro perspective. Matt, wait, Peter Tuffman's here. Perfect timing. Peter, would love to hear your thoughts as we roll into the first trading day of 2022.
Good morning, guys. I just started with sitting back and listening. Good to meet Luke and see this team talking. Really great content. I agree. I think everybody should be following everybody in this top group here, because they definitely show up every Monday and they talk they're talking the talk, they're walking the walk, and I'm super impressed. You know, they're not just throwing out opinions. They're in it, and I appreciate that. So I am forever a student of the market. And so I love listening to Danny and Juicy, and, you know, I love listening to you guys and learn from you. I am forever a student in this market, and I am always stay humble. I never think that with 35 years experience that it really doesn't mean shit. This is not your grandfather's stock market. I learn every day. I walk in here. I don't have an axe to grind. I don't pick stocks. I don't advise people on what to buy and or sell. I try and understand why the market's doing what it's doing and kind of get a sense of what the next move is. When I did hop on this call, I was really happy to note, you know, I was sort of wondering what I was going to say and what I think of this first day of the year. And the bottom line is, to be perfectly honest, look, I listened to Luke mention where, you know, saw some of these high flying names that really are performing well today. And that could be just some smart money, you know, some money out, new allocation coming in first day of the year. You know, we see it on the beginning of every month. And I think it's smart at this point to put money in those names. But I think it's really a wait and see at this point, guys. There are a lot of people with opinions thinking this market is going to really get whacked and go down 10 or 20%. I find that a fascinating posture in the way the market's been over time. I definitely see the headwinds that we are, or at least the anxiety that some people feel around the taper and the interest rate raises and what the year's got, you know, to show for us coming in here. But look, we're in day one. One day does not make a market. And I think a wait and see posture, whether you're trading or you're investing on a trading basis, guys, there are opportunities everywhere. You see a number of the meme stocks get hopped up today. Some of the guys who got beat up at the tax selling, tax harvesting sales of last week are definitely having a little bit of a coming off the mat a little bit. And there's always a trading opportunity. For me, these are just trading vehicles. But I think a wait and see posture to see how this pandemic, whether, people are getting pretty worn out by this. And yet, and I know, thank God, this is not a killer as far as we know, but we are seeing, shutdowns around the globe that are going to clearly have an effect on the economics of what's going on and going forward. We're going to see it in airlines. We're going to see it in hospitality. We're going to see it in a lot of different things. But I think a wait and see posture into the first week and see really how this thing pans out. I'm kind of baffled kind of where we are relative to this new Omicron and to, the fact that this thing is spreading like a bastard and that, this is a different movie than we saw a year ago or 2 years ago in so many different ways. But what we're seeing is that, whatever the mandates are or whatever, the rules are about isolation and whatnot, at the end of the day, with 500 and I don't know, 80,000 people a day getting this virus, you are going to see an interruption of virtually everything. And I noticed on my way to work today, the highways were quiet and empty. The subways were empty. The streets are empty. And whether that's, a function of people still in deep hangover mode or the fact that they were told by the banks to stay home or whatnot. I know my branch on Wall and Williams is completely shut as a function of COVID and whatnot. So I am fascinated by this market. I think today's rally, look, it's a day. It's a day in the life. It's the first day of the year, and I think the way the market's acting is surely I will follow suit on what Luke said, that it's a wait and see. I wouldn't be allocating huge sums of capital into anything at the moment. I would love to see what the big players are going to do, how this virus unwinds, and what the real effect is going to be globally.
Great points all around, Peter. And yeah, definitely a lot of companies have been pulling their people out of the offices. I think even Goldman was saying that they were going to have their majority of their people out of office for January. So we could see how that affects things. And yeah, definitely the wait and see market. Haven't made too many trades right here. I had AMD from last year, sold that pretty much at the open, have Apple calls right now. But obviously those are two of the safer stocks in this environment versus some of the stuff which you can really go down to, in the rabbit hole. But overall, I mean, things are looking pretty green on my end right now. From a stocks perspective, crypto is definitely having a bit of a pullback today. Ethereum down 0.7, Bitcoin down 0.9. So kind of running around with those areas. Anything else you wanted to add on there, Peter? And we might mix in a few other macro perspectives.
No, I don't. I really don't. I'm really just sort of trying to understand what I'm trying to not overanalyze, overpredict, not have a big opinion on what's really going to happen. As I said, I'm really fascinated by those who really think we are going to see some massive pullback when the reality of the interest rate raise and the taper happens and whatnot. Volume seems a little bit light this morning, and I'm sort of, I'm excited. I'm launching an NFT in January, and that's kind of fun. I've been watching. It's fascinating just to watch where people's focus is on Twitter, on social media, and whatnot. I know Wolf is we're backing up a couple of these fun launches in the NFT space. Guys who sort of have a mission and using this platform to raise awareness in mental health and empowerment and scholarships for young Gen Z girls, Gen Z women. So I'm excited about the future. I'm really optimistic about the future, about the market, about the NFT space, about this stock market. I think we are going to see an amazing year. Do we run up against some serious headwinds? It's very possible. Do I see anything like a 10% pullback? Absolutely not. Could we see a little follow through on the downside when the reality of what's going to happen in the interest rate world happens? Yeah, it's very possible. I mean, look, we could end up in the midst of a real shitstorm, depending on how this whole new story unfolds. So you know what? I'm a wait and see yet. I'm super excited about the future in all respects. I am I'm an optimistic guy. I woke up this morning, my energy was up. I'm battling all kinds of my own demons. But you know what? At the end of the day, guys, this is the most exciting time to be alive. It's an exciting time to be involved with all of you guys, and learn a day at a time what this market's going to show us. And I think that we are going to see this new generation in the marketplace, these new instruments coming out, these new apps, it's amazing time to be alive. That's all I got to say.
Love it, Peter. Everybody should definitely be getting some of that energy and working into their days. Let's just bounce right off of that with just continuing this macro talk. Then we're going to do a little bit of earnings and then some wrap up. Matt, I don't think you've spoken yet. Do you have anything you'd like to add to what Peter and Danny have said on the macro perspective?
Absolutely. I couldn't agree more. I think Peter's spot on about there's a lot people, especially 2020, 2021 reminds me of when I got started trading. I started trading back in the first financial crisis, right? That my career, I was a chemical engineer, got laid off, and then found my way into trading. And when I see 2020's birthed a lot of retail traders, I'm kind of like the generation before that, where that financial crisis birthed a lot of retail traders. And I see what happens when people jump in and just learn trading right out the door. And I remember the first mistakes I started having back in the day was all data looks bad, this and that, news says this, market's going to come down. I doubt what I see. I'm super smart because I'm an engineer. I know better than the market, and it's going to come down, when it did nothing but rally for a million years, right? So when you look at what people think now, and there's all this talk, there's a tapering coming, and there's maybe going to be rate hikes at the beginning of the year, maybe not, and logistical problems, all the stuff looks bad and markets at all-time highs. There's a new crop of retail traders talking about corrections, sell-off, this and that. But I'll tell you the mistakes I learned as a new trader way back in the day was that when people want to buy, especially when people are getting their jobs back, capital just influxes into the stock market. When people go back to work, times are better, you start putting money back in your 401ks. It just goes directly into stocks, and for right now, you can look, there's so much data out there that's showing how people are positioning. And I think a lot of retail traders, especially new ones, are going to get it wrong. A lot of people are calling correction. I don't see it at all. I see consolidation. I see very low volatile selling, light volume, as Peter has established, what he said earlier. We're seeing light volume, which is causing the market to be thin, but it's not unusually volatile, which is showing there's liquidity. So there's algorithms and people waiting to buy for every seller there is. So, learning my lessons way back in the day as I was getting started, I just learned not to doubt what I see in front of me because I think something must happen because, Newton throws an apple and it falls back to the ground. I learned to not believe that anymore and take everything one day at a time. We're starting the year out. It's not going to give us any clear direction. It's just going to be like, people are stumbling back to the office. Half of them are probably still drunk from 2 days ago. So you never really know what's going on until, give it a couple days to figure out how people really feel and are digesting this market. Now, if you want some facts, it's not just me giving some talking points that are just, feelings or words, is that I always look at the Command of Traders. It's a report that comes out, CFTC puts it up, and it really details where large positions are. This report was made for futures. Any futures contract has this report. And you can see, and I talk about this all the time, but this supports my bigger macro belief, is that it's just showing where people are physically positioned in these instruments. And so since about June, July of last year, we've been seeing a net loss and accumulated long on the asset manager's side, which means they've been liquidating since the middle of the year, back in the 4,200 S&P, right? And so we're trading right now in the upper 4,700s, and the asset manager's been selling. They've been literally liquidating almost 40% of what total net long they had on the non-dealer side. And the weird thing is why is the market going up and market selling? And this is just what inflation does. And you guys are seeing it right for your very eyes. Even the stock market is not immune to inflation. Just like that video card you want to buy, you have to pay twice as much. Well, Apple stock, you pay 30% more just because of inflation, not because of accumulated longs. So the interesting thing is that the market is pushed up due to shorts squeezing into the end of the year. once it bet against COVID, it realized the market's not going to tank again because of COVID. Going like on a pivot to there, I had Omicron. I don't know which variant, but I just got over it. I had actually Alpha or whatever the first COVID was back in 2020, and this is when nobody knew anything about it, and it was pretty scary. You know, I would get a phone call from my mom like every hour, making sure I was still alive, and it was really, really bad. And this variant, I think everyone's getting it, whether the asymptomatic, vaccine, no vaccine, they're getting it and they're getting better. And which is great for, you know, the pandemic. You know, we see that it's finding that natural stasis, that equilibrium that a virus will find. And so that I think I'm removing from my own narrative of the market. I think COVID is a complete non-factor for the stock market starting this year and forever. I think it's no longer going to shut down countries for long periods of time. It's not going to shut down this country ever again. So I think that fear was being unwound at the end of last year when Wall Street was realizing that's no longer a good short bet to make. And I think that explains that short squeeze we saw into the end of the year. And that the chart I shared with the space, you can see how, like, for every seller on the asset manager side, you had leveraged hedge funds closing shorts. So they were frantically getting out of their COVID shorts as well. And the market was extremely liquid going into the year. And up until last week, this is the first week in about 6 months where we saw 2 consecutive weeks of asset manager net accumulation on the long side. So people are starting to buy again at these highs. And I think it's because people went to cash and they realized, oh, wait, we're in a period of inflation. Let's go ahead and get back to the stock market. And I think that it's very bullish going forward. And there's really no negative thing that can come from this unless people start losing their jobs again. As long as that job market continues to recover, that the logistical problems we've been experiencing, it's just like us pushing like this concrete ball up a hill. Once you get the momentum going, it's going to go, and it's going to go pretty fast, and it's not going to stop for a long time. I think this is the start of like 5 years of extremely stupid bull market. When I say stupid, I mean stupid highs like back in 2007, where people just don't understand why it's so high. That's how I feel. I feel like the next 5 years are going to probably be the best bull market we'll ever see in our lifetime. So that's my thought. Once all this negativity dissipates, the Fed can't raise interest rates fast enough to slow it down. So I feel like we're going to enter a very good, nice period, at least, you know, not starting today, not starting this week, but I think starting middle of the year, as people realize there's not a lot of negative sentiment going out there. There's not going to be a lot stopping this market once those cogs get spinning again. I think it's all good.
Awesome stuff, Matt. Some really great points there, and definitely your thoughts on the potential stupid 5-year bull market, I'm sure, make the retail traders very happy. So good stuff there. Now, would love to kick it back over to Juicy. Would like to hear his thoughts on any big picture thoughts, and then last we will send it over to Richard.
Yeah, man. Again, thanks for having me on. So for me, big picture thoughts, man. I think everybody needs to realize, you know, we do got some negative catalysts coming up. And once we can get past them, I think we can go ahead and start talking big picture. But until they come, interest rates and the potential of, for the first time in a very long time, us not having a Fed-backed market. Like I said before, the majority of these retail traders that are out here now just started trading within the last 3 years, and they've never traded without a Fed, right? So there's a big possibility that, you know, we won't have it. So that's going to create a whole new environment. So for me, the bigger picture is going to happen after all these events happen. So right now, I just want to reemphasize everybody's neutral. That's because every one of these traders, again, this is why I'm telling everybody to follow these traders. They trade a plan. If this happens, I will react like by doing this. And that's the name of the game. Like what a lot of people overlook is the discipline to not do anything. That's like the single most hardest thing to teach or show anybody. The discipline literally just to sit on your hands and not trade, right? So for me, I'm pretty much going to take it day by day. I'm not looking to allocate any major capital. And I'm going to save it for after these interest rates. So I'm pretty much day trader hat on until SPY gets above 479. I'm pretty much not looking to swing anything. So that's pretty much it for me, short and sweet.
Awesome stuff, Juicy. Great stuff as always. And now, last but not least, would love to hear some big picture thoughts from Richard.
Yeah, I don't think too much about the big picture perspective, the macro environment. I think I'm more along Danny's camp where, obviously I want to know what the Fed is doing, what's going on with QE. But for me, I'm kind of actually just kind of trying to focus my attention as much as I can on the leadership stocks and the stocks I actually want to be trading. Since for me, price action pretty much governs all my actions. So that might be deflecting or a cop out answer, but I don't care too much. I think whatever happens, that the action of the hedge funds is going to show up in the price and volume action on the individual charts of the names themselves. So that's kind of how I view everything. Everything will be incorporated and show up on the charts using technical analysis.
Great points there. And again, just want to, show some love to all of our amazing speakers. We really do have the best in the business up here. So do yourself a favor, give a follow to every one of these speakers. They put out great content all the time, and they definitely deserve the follow. So show them some love. And also, just quick shout out to Gav. If you enjoy these spaces, Gav is the man behind the brand. He's made all this possible. He's really created Wolf into the great community that it is today. So major shout out, props to Gav, and would love to send it over to him for some quick thoughts.
Thanks, Joey. Appreciate that, buddy. Yeah, really working on this account and that account. Should have an iPhone coming tomorrow so I can continue to host from both. But you've been doing a great job in the meantime. And yeah, trying to get this account to 10K if anybody wants to help. That's the goal for this week. Okay, with that being said, big shout out to the Wolf Account, everything that's happening over there. Once more, the Wolf Account and Stock Market News are your place for spaces this coming year. Not so many thoughts on my end, a macro perspective. I think everything was covered, from ranging to the Fed to bullish and bearish possibilities, the wait and see. Still just right now in these Apple calls, down about 5-6% on them, but those are going to be a swing for me. I'm not going to day trade a ton this week if possible. Would rather take things from day to day whenever possible. But yeah, just keeping it moving. I think we're going to move into closing thoughts now as we're been running for about 2 hours. Unless Evan, is there anything else you wanted to touch on before closing thoughts?
Normally we would come in a little bit with earnings, but it's just such a slow week in that area. We have some like Bed Bath and Beyonds and that type of thing, but nothing too notable about talking there. We got the banks coming up, starting earnings season back in about a week or two or something like that. So we'll have some in-depth coverage with that. But I think we're a perfect move on into wrap-ups.
Okay, sounds good. So we'll be going around and in a wrap-up. If anybody just has any closing thoughts, or maybe stocks, I would love to hear a couple of stocks that are really on everyone's radar for this year. Something that they think they could be maybe trading a lot of times or long-term holding. Anything along those points. Matt, would you like to go first?
Yeah, absolutely. I'm a huge fan of the semis. I think that we're gonna have a really powerful year. Apple and Microsoft on the big tech side, those are plays that I'm looking for. Nvidia has been my superstar all year. I think that's going to be my superstar going forward. As far as any other sectors, I really feel like the slow moving ship is going to be banking. I feel as far as when people get their jobs back and it becomes easier, I won't go too far into this, but this in general, people get their jobs back, it becomes easier to dish out loans. And with the normalization of housing prices and car prices, inventory, all that stuff coming back, we're going to start to see some stimulated lending on big purchase, big ticket items like houses and cars. And I think that's going to be really strong for the banking sector. So as far as like a slow burn creep up, as soon as banking turns around and the financials start looking really good, I feel like that will be the turning point for the S&P. And so some stocks on my radar, I was always a big fan of Morgan Stanley. That's kind of like my go-to in that realm. And so semiconductors, I like Nvidia, Apple, Microsoft, and then some financials. So that's where I'm going this year.
Awesome. Thank you so much, Matt. One more time, big shout out to everyone that was on this panel. We also did record this, so the recording will be put out on the Wolf Financial timeline afterwards. So if you wanted to re-listen or go back to anything, just make sure that you're following the Wolf account, and then we will also put it into the Google Calendar. So once more, if you weren't in here earlier when we talked about this, we have a free public Google Calendar with thousands of members ranging from every area of finance, and you can go on that to see when all of our spaces are, who's going to be speaking, and recordings. And once again, the best way to get on there is just to DM either the Wolf Account or Stock Market News and just let them have your email, preferably a Gmail, and just ask to be put onto those calendars. So many great people on there. Thank you to everybody that's been joining up. And also a big shout out to Bullish Rippers that's in here, the Green Raccoon account. Wolf, Stock Market News, Bullish Rippers. We'll be doing a lot of stuff this year together. You'll probably hear me hosting some stuff from the Bullish Rippers account in the coming weeks. So be on the lookout for that. Okay, let's continue the wrap up. Danny, would you like to go next?
Sure. I'll definitely echo semiconductors. I think they've definitely been my on the top of my radar probably for the last 4 to 6 weeks. And they like to not all go off at the same time. So we saw, Micron really, take off after earnings. And now we're seeing TSM starting to catch up. I think MRVL was also having a nice day. Micron still having a nice day, although it's definitely consolidating. So definitely my eyes for now semiconductor focused, but there's going to be individual names. Like, look at what's going on with Tesla and the delivery numbers. You have to focus on sector, but you have to also, like Richard was saying, is look at the top performers, look at the superstar stocks that are going to continue to move and buck the noise that's going on, whether it be Fed, Omicron, whatever. So yeah, I mean, right now I'm looking at FCX, I'm looking at Micron, still looking at Nvidia flirting with 300, Tesla now at a really key level here at 1166. Walmart looks pretty good. I would not discount, your staple type of names. They're not sexy. They're not going to give you outsized returns, but the HDs of the world, the Walmarts of the world. I mean, they're safer plays. But people are still building homes. Contractors are still buying materials. They're going to need the HDs and the lows of the world. FCX, copper play, materials play. Look at utilities. Look at energy. I mean, these things are not going away anytime soon. So, outside of those sectors, I'm just watching those individual names. Roblox still flirting with $100. UPST still looking okay. AEHR, another chip play that has had a monster run back to its all-time highs. So for me, focusing on what the individual names that are going to be as strong, and then also glancing at what sectors have been showing relative strength for the last day, the last week, the last 30 days. So yeah, I mean, that's pretty much what I've been watching. I've been talking about XLRE, which is your real estate sector. That's up 10% over the last 30 days. XLU up 8%. BJK up 8.5%. XLV up 8.5% over the last 30 days. So that's what I'm looking at. I'm looking at what's been performing and what is showing relative strength to the market. So that's pretty much what I've got. And look, it's the first day of the week. There's definitely going to be some crazy action. Like I mentioned earlier, the bond market was closed today. So let's see what the week, let's give this opening week a chance, right? Let's not jump all over and scream the sky is falling, or the bulls are raining over one day. Let's give this a week or two. Let's ease into the year. Let's see what the prevailing noise is going to be, because I think with Omicron, what we're seeing is a lot of high infection rates, right? But low hospitalization rates. And so I think this is, we're still in winter, right? And except, if you're in California or Florida or Hawaii, it's pretty cold over here, and people are bunkering down, especially here in New York, as Peter was saying earlier. So yeah, I think we're in this for another 4 to 6 weeks at least. I think we're going to see cases continue to rise. But I think instead of looking at the cases rising number, look at the hospitalization rates, look at the death rates. If we don't see any, crazy numbers there, then I think once this, this kind of quote unquote season of Corona passes and we head more into the springtime, then I think we start to see, all right, what's the Fed going to signal? Where is inflation looking at? So that's basically what I'm going to be looking at for the first quarter of this year.
Awesome. Great stuff. Thank you, Danny. Danny, what platform do you trade on, by the way? I'm just curious.
Thinkorswim.
Okay. Very cool. Awesome. Yeah, Danny's great, and I'm excited we'll be having a call later today to chat over more of the fibs and stuff that you do along those lines. Danny's a great mentoring coach as well to a lot of people on FinTwit. So if that's something that you're looking for, he's probably the right person to be seeking. Okay, let's keep it going, giving everyone just a few minutes here on wrap up. Richard.
Yeah, sure. So I'll echo everybody who's echoed the semis already. I think that's definitely a group that you should be focused on here, especially in the growth space. They're really the leadership group right now. I think EVs are definitely one to watch as well. LCID, Lucid, as well as Tesla. Rivian, a little bit weaker, maybe it's still within its IPO base. You have that gap down. I don't like that chart quite as much, but Tesla, give it a few days, let it settle down, see if there's a setup that emerges where you can manage risk tightly. I definitely think that should be on your radar. Other than that, this year, I'm really focused on really refining my routines and structure my training a little bit more, journaling, and I think something everybody has an issue with. Just kind of speaking about Tesla today is FOMO. Never feel like you've missed an opportunity or a trade simply because the stock goes up without you. There's always going to be a chance to get in later on where you can manage risk tightly, and it does nobody good for you to just jump into a trade blindly where you can't manage risk and either you get shaken out or something bad happens and you're just acting outside of your system and acting randomly. And over the long term, you want to be as consistent with your actions as possible. That's really how you can improve over time. And speaking about that a little bit, I did provide kind of, I'll pin it to the top here, a structure for you to kind of review your trades over the past year or so, and review your trading, review your routines. So if you're interested, I think that's pinned to the top. Let me go ahead and make sure that is. But regardless, definitely go back and look at your trading over the past year. Think about your weekend routine, your daily routine, your post analysis. Think about whether you're setting yourself up for success every single day with a daily focus list, and do all the little things right and review your actions. That's really how you become better over time and basically make sure that you're studying your game film and are ready every single day. So sorry if that's a little bit long, but I think definitely emphasizing structure and process is super important, especially if you're a newer trader over the past few years or so, and don't have that set up already. I think that's super, super important. So thanks again for having me, Gav and Wolf. And yeah, those are my thoughts.
Really good stuff. We're definitely on the same page there with wanting to journal and write down. That's definitely my plan, is to try and journal my trades that I make each day, write them down, look back on them, try to, just fully understand, what went right, what went wrong. Glad that we're off to a decently hot start in 2022 here. That's pretty nice. And just kind of like trying to understand, because last year definitely, like, I think we all could say this, there could have been more, right? There was a lot of opportunities, whether that was you took a win, but it wasn't as big as you wanted, or a lot of losses. There's definitely more that can be done, and it's just a process, the same as anything to get better at. And a lot of us, don't have decades of experience within this market. So to, engage and really put in effort and take even 20 minutes a day and sit down and say, okay, this trade went wrong. Why? I bought it here, I sold it here. Did I look at the fundamentals and technicals beforehand? Did I look at option flow? Did I really want to swing this and I got out too early? Did I, want to make it a day trade? I didn't get out early enough. And just trying to kind of figure out our process. Talking it over with friends is also very helpful. Planning on doing that on a lot of spaces this week. So things along those lines. Really good stuff, Richard. Okay, Juicy, any closing thoughts?
Yeah, man. Again, thanks for having me on. I just want to go ahead and echo what everybody's saying. Everybody's saying the same thing, and I just got to agree. Semis are the way to go. In particular, I'm watching NVIDIA and AMD. I'm a big computer guy. I built rigs and I trade off rigs. And one thing I got to say, anytime you got a business that has a product that is so in demand that they can't keep up with the demand of that product, that they have to double the cost of that product for the buyer to consume, I want part of it, right? And that's why a lot of the time you've seen like NVIDIA just going up. You go try to buy a 3080 chip and try to stick it in your computer. It's expensive, man. If I was NVIDIA, honestly, I'd double the price again just because I can, right? Just to bring in more income. Now, with that being said, got to take it day by day, man. I think this year is going to be kind of hard to predict because, again, we're going to be rising interest rates, and we can say whatever we want. Raising interest rates in 2018, they raised it 4 times and dropped it 4 times, right? So honestly, that tells me the Fed doesn't even know what they want to do, no matter what they say. So I think we're in a wacky environment, and we just got to get through the headlines. And until we can get through those headlines, I think the best place to be is to take it day by day. I want to shout out what Richard just said is, focus on the consistent actions, guys. And that's the name of the game, right? All my trades are the same, and that's why I'm usually successful, because same trade, same result. And when the trade isn't working out, get out of that trade very fast. But that's it for me. I got to hop off and run my other call. Again, thanks, Wolf, for having me on. Look forward to tomorrow night or tonight. And we'll keep these spaces going. Be sure to follow Wolf. Check out the calendar. And I'm out of here, guys. Be easy, everybody.
Thank you, Juicy. Take care. Okay, so I think let's just go over to Luke real quick, and then we'll tap back to Peter and stock market news. Luke?
Yeah, I mean, I'm just going to continue the echo train. So to echo, I'm really liking semis going into the new year here. Especially, at least for me, AMD and NVIDIA have been excellent traders. I mean, the breakouts are normally pretty sizable when we get them, and just solid names to trade. So very in and out of this market going into the new year. When it comes to the long-term stuff, I'm sitting on a little pile of cash. I did some trimming before year end. On the long side, I continue to hold my longs that I held throughout 2021. So Apple, Boeing, AMD, Amazon, Facebook, and NVIDIA, I'm holding in and throughout 2022. Very excited about those names. I actually take a look at Amazon. I just want to, before we close, touch on Amazon here. They do have earnings coming up here month end. I have 2 dates. CNBC says 31st and E-Trade says the first of next month. But either way, you take a look at that weekly chart on Amazon, and it's had a little run up the previous few earnings into the print. So that's something to pay attention to, maybe a name to play. Also, the setup, it's been building a base here for quite a little bit, all the way since, let's see, 7/13 of last year. So I am paying attention to Amazon as well as a trade, or a multi-week trade, a swing. So that's something I'm looking at. But yes, semis. I'm also liking financials throughout this year. I think those could perform pretty solid. And then I always like to say, I have a saying, when in doubt, fang it out. I think the fang names continue to outperform throughout the year as well. But that's really what I'm eyeing, very in and out until we get a bit more direction determined in this market. And I'm willing to sit on a little bit of cash and wait to see where we get that direction. But that's about it. Fantastic space. Everyone go give the speakers a follow. Every single one of them is absolutely amazing, delivering the best content every day. So go give them a follow. And thanks for having me on.
Absolutely. Thank you, Luke, for being here. Okay, with that said, Peter, just popping back to you. I know you spoke earlier, but any closing remarks?
Sure. Really good to listen, everybody. You know what? I will mimic, not obviously what stocks that you guys are talking about, but the fact that a number of you discussed honing your skills, right? You know what? The bottom line is, I think that the market's going to be a bit choppy. And I think the most important thing, but every single day is absolutely generational and pivotal price action. That if you guys learn technical analysis, in my opinion, from a day trading perspective, not a long-term investing perspective, but from a day trading perspective, this market, as we've seen in 2020, 2021, we've learned a lot, and a lot of people have gotten, there are a lot of diamond hands, a lot of diamond hand people who made a lot of money trading in the last 2 years, and a lot of people rarely will admit it, but got their ass handed to them a lot of times, right? They may have been, winning somewhat, but I would say, and I hear about it because people come to me on a regular basis, people who sort of thought they had a little bit of more of a diamond hands than they did, and they turned a lot of winning trades into losing trades. Some people even turned a winning year into a losing year over the last 4 to 6 weeks. So the bottom line is price action, technical analysis are the tools that I use on a daily basis to try and navigate this market successfully. So this is a great time to hone your skills. Never before have we seen the kind of volatility we've seen. And if you have those tools in your toolbox, you can be creating some wealth here, man. Absolutely. There are certain rules and there's certain criteria for each of the trades, but you can't follow the rules half the time because you'll end up giving back all of your winners. So, I'm a big proponent of technical analysis. I do run a technical analysis school with David Green, Wall Street Global Trading Academy. We do have people who come to us who are still trying to get back to even on stocks. Look, one of the other speakers talked about FOMO, using hope as a strategy for trading. These things are big mistakes, people. The bottom line is if you're a day trader, following the rules is super important. Risk management, stop orders. Don't use mental stops, use real stops. The stock market has given us one of the greatest tools in the world. stop orders, right, to protect your capital from a day trading perspective. So hone your skills, learn technical analysis, follow the rules, and use this opportunity to really to get in the game and make some money and have some fun. And that's all I got to say. It's really an honor to be part of this group here. I love listening to all of you.
Love it, Peter. You want to come on later in the week for some NFT space?
Absolutely. I'm all over it.
Okay, cool. I've got a couple publicly posted. Everybody that wants to, if you're not on the Google Calendar, you can also still see the Wolf schedule by going to the pinned post on the Wolf page. I always put up a full-on schedule so you can see there are 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 spaces, with this being the first of those that are going to be happening this week, plus a potential 3 more. Actually, there's already 12 because I missed one that was Thursday morning, plus potentially 3 more that may still be scheduled. Okay, let's go over to stock market news. Evan, for any closing thoughts or anything else that you want to add to this?
Awesome. So it's me. I'm over on the Bullish Ripper speaking from this account right now. Yeah, a lot of the sentiment there that was said is really what it is, and I don't necessarily need to repeat that. Just overall, what I really want to get from this is the best thing that you can do. First of all, with journaling, Gav, you hit on it quickly, but it's really important to also not just put down what you're trading, but also put down like why you took the trade, kind of how you were feeling during it, so that when you look back at it, you could see, oh, okay, when I took the trade because of this reason, I'm getting 20% right most of the time, and you can cut that out. You can kind of start to see a little bit more of the picture of what's happening. So that's really important. I think it kind of fits around the overall theme that I want to get at here is just learning a lesson really in the long term is bigger than anything you could take. Maybe if you get a $1 billion trade or whatever it is, but the reality is learning something that you can utilize to make more money in the future is really what this game is about. And it's kind of just testing out there and really trying to do things. And I think that while you're still in that testing phase and figuring out what you're doing and really what you are and how you are as a trader, like just the most important thing I would say is just don't go all in on your trades. Really kind of start small, become the expert, trading around in X small amount for you. If you have a lot of money and that's $1,000, or if you're just starting out and that's $50, don't be afraid to get in there and test the market, test the waters, test yourself, test a new strategy, whatever it is with a small amount of money. Kind of, a lot of people have up here and have their thoughts on paper trading, and I do tend to agree that it's really difficult because you don't have the same emotions in there. But for me personally, I don't know about everyone else. When I throw that tiny bit of money in there, it really becomes real. So all I want to do is just when you are kind of thinking about what this looks going forward to you and what trading looks for you going forward, it's an ongoing thing. Lessons are learned every single day, but as you're learning those lessons, don't destroy your account in that meantime. Always weight your positions correctly. And yeah, no, I'm excited for a bunch of these spaces going forward with Gav. We're going to plan some really cool ones to be hosted from this account. Trying to think of some new like cool series or whatever we can do. So we have some really great thoughts on that. And yeah, I'll throw it back to you, Gav. Actually, one more thing. I'll just say make sure you're following all the speakers up here. I know a bunch of people have said it, but if you haven't already, what they're saying in this space is really informative. They're all amazing. They come in here off the cuff. We don't tell them what's going to happen before at all. They just come in here and really spit some real knowledge. So, those posts on their timeline where they really had the thoughts, the time to think, and really had the ability to kind of filter and whatever they want to do, it is really, really high quality posts. You really do have to be following all of these people. Make sure you're following Wolf for Amazing Spaces and Gav, the man behind it. But yeah, now I will throw it back to you.
Thank you, sir. Appreciate that. Yeah, excited to keep the ball rolling. Like I said to everyone, this will be the only space that I do today, just because of technical difficulties, but hopefully those will be gone starting tomorrow, God willing. With that being said, Joey, just like to see if you have any thoughts that you wanted to throw in here.
Yeah, just real quick, just again, major shout out to all the speakers. We're very fortunate to, be joined by the best in the business up here. So do yourself a favor, give them all a shout out. And yeah, I'm just very excited, very bullish, if you will, about the new year. We built a great foundation in 2021 and very excited to, keep the ball rolling, as Gav said, and big things ahead in 2022 and beyond. So really excited and thankful that all you guys joined us today, and we have some great stuff planned for you this year, so get excited.
100%. And just to elaborate on a couple of those things. So tomorrow there's a space. It's going to be at 12:30 p.m. EST, and that is going to be a live trading and charting space as well. We're
Oh boy, did we lose him? Evan, is it just me or did we
always
lose
doing 8
Gav there?
p.m.
Yeah, I
I'm
lost him.
here.
I was
I'm
just
here.
actually taking a quick peek.
Hey, he's back.
Oh, we're back. Okay.
He's back.
No,
He's back.
I'm here. Chill out. Chill out. And then
As he says, chill out, goes right back into it. I'll finish. I'll finish it out for him. They have another space going at 8 p.m. tomorrow. Let me go and double check exactly what it is. But honestly, the best way that I know how all this stuff is happening. First of all, I'm on the spaces calendar. But if that's simple right now, you're all probably on that. You can go and double check on the Wolf Twitter account. It's pinned up there. But the 8 p.m. space is going to be market sentiment and technical analysis. I'm going to be on it. We're going to have exclusive Danny, Stock Talk. We got Blake in the crowd who's going to be on there, so that should be a really great thing for then. But yeah, Gav, are you back?
yeah, I'm here, and I think with that we can go ahead and close this one out. Wishing everybody a really great day. First day back, and whatever your goals are for 2022, whether they're market related or something else. We're a community and here to support. And feel free to put those out there. Tag us. Whatever it is. If there's ways that we can help, we're happy to be here to back the crew. Okay, everybody, take care. Have a great rest of your Monday. Joe, you can go ahead and end it here.
Awesome. Happy New Year, everyone, and let's make 2022 the best one yet. Take care, guys.